Hello and welcome to another episode of Casual Friday. I'm back with the Duck. First and foremost, thank you for your support on the previous episode and all the kind birthday wishes. It's very much appreciated. Hope you keep enjoying the show, and we're going to talk about markets and other stuff. Don, first and foremost, how are you? How's the pond?
Oh, pond is all right. It's been a little bit exciting the last few days, but I'm more than happy to get it a little bit less exciting, and then kind of concentrate on the markets again. But yeah, so all good on my end. How about you?
That personal life volatility spike, eh?
Yeah.
Understandable for a man in your position. I wanted to start with some pretty serious and heavy news, actually, and it's that McDonald's is back tweeting about crypto.
Oh, it's over,
And
dude.
historically, that hasn't really been the best sign. You can see they tweeted, "What did I miss?" because they hadn't tweeted from the corporate account itself. They replied to people saying, "Hey, sorry, your burger's expensive," but they don't sort of ordinarily tweet. And so they replied, "What did I miss?" And Binance, of course, replied, "Not to miss out on an opportunity." A lot of green candles. Good response, very witty. And then McDonald's at the cursed WAGMI. We are going to make it. Or we're all going to make it. I think that's the one, the second one.
Yeah.
And then, Binance at the salute emoji. Dude, I don't like when these brands get involved in the... Like, it feels like I'm living in some cyberpunk dystopia when all these, like, profit-maximizing brands pretend, like... attempt personification, and it's like, hey, I'm one of you type of things on social media. It just feels like some sort of rogue AI gaslighting experiment. I don't like it very much.
No, I'm not a fan either. It's just really, really odd. And the track record isn't really the best.
No, it's not. It's not. This is something I was thinking of, though. Like, I still, like, if a good friend were to ask me about crypto, and I know it's not one of those adversarial or cringe or awkward or what should I buy to get rich conversations. Not that I know the answer to any of those anyway. But if someone were in good faith to ask me, what does Web3 mean? Would you be able to tell them? Because to me, it was, like, I wouldn't. Like, frankly, I wouldn't. It seemed like it almost came out of nowhere as some imagined concept to like rebrand crypto to dump more useless governance tokens on noobs. And then you use some words like aligning users with stakeholders and incentive mechanism, decentralize the web, something, A16Z, $10 trillion fund, wave your arms around, and hopefully you've sold the top. That's kind of my best attempt at iterating what Web3 actually means. And even now, Jack Dorsey is working on like Web4 or Web5, and now there's Web Plus as well. It just seems to be this carousel experiment of how many times can we rebrand crypto tokens to dump them on plebs. Is that too cynical?
No, I think it's kind of funny how we always try, like, crypto gets a bad name and then it's just like, fuck it, it's just gonna rebrand. It's just fucking rebrand, send it again. It's happened before. It's happened.
Yeah.
Like, it's so funny to me every time, and they're trying to make it like so serious. Like, because all crypto isn't serious enough anymore. Because at the start it was, right. Crypto had this like mysterious ring to it. Like, it sounds so cool. And
ideological undertones that weren't linked to just like VC money and
exactly
stacking dollars. Yeah.
And then that turned into everyone associated crypto with a scam, right? Because what most people did was they bought the top on Coinbase on like a bunch of shit coins. They went down 99% and they lost all their money. And now that we have like the association with crypto equals scam, it's like Web3 now. If that turns into a scam, it's going to be something else. It's just, I find it very, very, like, it just seems scummy, especially given that it's usually driven by the big funds that want to dump on people. Like, if this was a crypto native movement, right? But like, for me, it doesn't really, like, that's not how it looks. It's just like we want to look cool in the public's eye again, and what better way to kind of make us look good than comparing us to the early days of the internet.
Yes.
Nah, it's
like the one analogy we have, right? It's like, oh, it's just like the tech, and a lot of it is bad, but then we've got a bunch of Amazons, just hiding somewhere in a form of a useless governance token. Yeah, it's so bad. It's really cringe, to be honest. And that's why I think I'm bullish a lot of these casino type projects almost, because they sort of don't flounder about and present crypto in its most sort of use. Well, as far as like, if you had to distribute it by volume, like speculation and casino type stuff, like takes the cookie, right? That has to be at the top of it. So I almost have this like admiration for the bluntness of some projects, protocols, whatever, who are like, people want to gamble, we're here to facilitate gambling. It's not that deep, bro. Versus a VC who will like dump infinite tokens to a bunch of plebs and then talking about like a decentralized web future, Amazon, whatever. It's like, it's very hard to take that seriously.
Totally agree.
I'm sure we'll come back to that, given that's like most of the space anyway. But we do have some charts to talk about. Not much has changed since. I mean, we've just gone sideways, right? At least as far as the higher time frames go.
Yeah.
Like the daily and the intraday, which have kind of been consolidating. We're poking above that now, which seems nice. And there's a bit of like Friday seasonality short term going on, where the S&P has just been bumping every Friday, and that correlation's been favorable for crypto. So that's kind of what we're seeing on the daily at the moment. This is the last episode we'll get to do before the monthly closes. I'm wondering if you have any either predictions or comments on, what type of close, depending on the close, what type of impact that would have. So as we discussed in Technical Roundup, there's a tentative monthly range high at like 23.3k, which is just the highest monthly close. And I think that's a level you also posted about when we were about like at sort of 19, 18 below the summer range, saying that that's the monthly breakout trade essentially.
Yes.
And the target would be 30 something, more or less, like 30k plus, which is the former range. So if the monthly closes, let's just take a snapshot of what it looks like right now, which is just like more or less at the level with a wick, but not above it. Does that meaningfully shift or inform your buyers going into next month, or is it like, fuck it, it didn't break out, but it still looks strong?
No, the moment we actually broke the consolidation to the downside, the level shifted one level lower for me. So we went from, okay, the breakout level is 23.3k to, okay, the breakout level is 20.4, just based on the fact how important the range low was. You can even see like some sort of semblance of a range on the monthly time frame that we broke on the FTX news, right? The kind of breakdown below 20k thing. So for me, if we close like this, we already did the reclaim, and the setup that I was talking about back then, which was at 20k, when I was like, okay, if we manage to get back above 23, that's good. We didn't back then, but for me, that setup is already in play if we close like this. And I'm gonna assume that the target is gonna be 35k, so like the next one. So yeah, that trade is technically in effect in 4 days if we manage to hold up, which I think is very likely. Price action looks good. There's not really good reason to just reverse in the next 4 days. Watch me jinx it, but
I know, right? You just gave the market one.
yeah, but like for me, the bullish trade is already. I mean, I'm already in the bullish trade.
That certainly helps.
But the setup is there. If we close like this, I think it's not like, yes, 23k is resistance, and maybe we have like a little bit of a down month next month. But I think in general, like any kind of dips you get, just TA wise, you want to be buying as long as 20k holds. So 20k on the monthly is the level to kind of hold. Anything above there just looks giga bullish to me. And the reason for that is that just like monthly fakeouts don't really like, they're very rare. And when you get a signal on the monthly, especially, like, I mean, if you get a fake out, it's like one thing, but if you get a signal on the monthly, you usually want to take advantage of it because that leads to the biggest trades that you can get in crypto. Just if you scroll through on the left side, there's been so many nice signals just based on the monthly. And this is not going to be any different to me. I'm just going to trade it the same way I've always traded the monthly, which is just assume that everything that I see is real until it's not. And for me, 20k reclaim, that's like a really strong signal. I want to target the next resistance, which is 35k.
So you're a 23k disrespecter when it comes to the monthly swing.
Yes.
Understandable. It's also funny, there's like a bell curve meme that you can make with your market view, which is like 50 IQ is like, hey, breakouts are real. It broke out, it's going to keep going. And then there's the mid curve, which is like, it's a deviation, it's a trap. Everything is set up to get your liquidity. Nothing you see is real, like full tinfoil hat.
Yes.
And then on the other end, again, with the hood, it's like breakout is real. So I guess that's kind of the paradigm in which you're operating. Is that more or less fair?
Yeah, I think the thing is, we've had a long and brutal bear market, right? So people are understandably cynical. But there's not really been too many reasons to get like really, really bullish, right? I mean, it's just been straight down the entire time. And now that we have like a real reason to be bullish, people are so cynical that they don't want to take it, which I think is a mistake. Even if this turns out to be a trap, if you get in early enough, you make money regardless. If you don't, sometimes it's worth taking the risk, right? If you want to be in crypto, you have to be bullish at some points. And I would much rather, even if I didn't have a position, I'd much rather look for buys right now than I would just sitting on the sidelines being angry that I didn't get the bottom, or being bearish just because it's been bearish the last year. I don't really operate like that. I just much rather take the setup when it's there. If it fails, I'm gonna lose some money. In my case, like I don't think it's just gonna full reverse to 16K. So I'm probably gonna get out of this okay, regardless of what happens. But yeah, I think these kind of signals just always worth taking. And then if it doesn't work out 1 out of 5 times, just so be it. But the other 4 times, you're gonna be in a prime position for, like, just in general, like for the upswing. And even if this is a bear market rally, right? And there's been a lot of discussions about, oh, is this a bear trap? Is it not?
Useless discussions for the most part.
Yeah, and as you said, like on the tweet, like very aptly, like it doesn't really matter. It doesn't, right? Because if you can make money on this thing, like why do you care so much if you are right on this being a bear trap or not? Because I mean, prices on a bunch of altcoins went times 3, times 4, times 5.
Right.
Or across the board, like pretty much everything is up like roughly 50% along, like Bitcoin, even Bitcoin's up like roughly 50%. I mean, that's good enough, right? That's a bear market rally, maybe, but that's good enough to kind of take advantage of the market just giving you something. So it doesn't really matter too much, I think. Like that whole discussion is a stupid one.
It's really stupid, yeah. It's so self-indulgent as well, you know. Like, your edge is going to be in trading the rotation, not naming it correctly. You know, this isn't some, I don't know, TV show type of game where you have to, like, label things and get points or something. You have to trade the rotation. If I had to steelman the argument, it would be something along the lines of, if you correctly identify the nature of the move, like is it echo bubble versus bull trap, bear market rally, whatever, that kind of sets your expectations for the rotation itself.
Yes.
But I'm just like, I would probably just attack the first premise of that argument, that I would dispute that most people have like a useful way to define these things in a way that's A, accurate, and B, confers an edge, right? Like that to me seems a bit stretched. And you can't, and thing is, these things are always labeled in hindsight. That's the point, right? It's like once the market makes new lows, everyone says that was a bear market rally. Once the deviation or whatever happens, you call the trap, this, that, and the other. It's not like a forecasting tool. It's more of a reflection tool, if anything, the way it's popularly, used in sort of popular discussion. So your edge isn't going to come from nailing the label before it plays out or doing whatever. Your edge is going to come in executing your setup. And if it tells you to buy, it tells you to sell, whatever, you take care of that part first. Then you can sound clever labeling it whatever you want after the fact.
Yes.
There's like a bit of a case of misprioritization, I think.
Mm-hmm.
Speaking of this monthly, would you buy a /add on a 20k retest? Like, let's say this closes like this and you said you might get a red candle or whatever, but bigger picture, it doesn't matter. And it does start to go to 20k. Would you be like, oh shit, it really shouldn't be coming back here, it's retracing a lot of momentum? Or is it like, fuck you, the monthly is on my side, see you at 30k?
I mean, if I didn't have a position, I'd buy 20k. Just a monthly retest, it just looks really good. I think that would be the wick, probably. Given I have a position, I have more than I want. So I'm excited to be selling. Not that I want to sell right now, but I'm kind of like I don't want to increase it. I have more than enough risk. So I'm not gonna buy 20k if we get there. But if I didn't have a position, I would. And the only reason why I'm not buying 20k is because I have more than enough risk. I don't want to risk more. I mean, I've got a family on the way, so at some point you gotta at least stop with the degening a little bit.
You need to subsidize me as well every month for this show.
Yeah, so I don't.
You're your biggest expense by far. Oh god, turn off the heating, love. We've got Cred's monthly allowance.
Oh yeah, but no, for me, it makes sense. 20k is a good level. You want to be buying that if you don't have a position. If we even get there, I don't think we will. But if we get there, I think that's a gift from God. And if we go below, I mean, we're just all fucked. But that's
a gift from Satan. Yeah.
Yeah. But I think honestly, 20k is such a good level that I just buy it almost every time. If I'm not already in a position, because at the end of the day, you can even put the risk reward tool on there, right? Because now you actually have a proper setup, which is basically you buy 20k you target 35K, which is a month. Like this is the monthly setup, right?
Right.
You buy 20K, your stop loss is at 16.5, 16.4, so basically below this monthly candle, this current one, and your target is 35K. That's a really, really good risk reward that you're gonna get. Like that's a 4 point something risk reward. I think it's, if you get the 20K buy, that's more than likely to play out. Like that's like almost like, if at the worst in my mind is the 50-50, right? And if you have a 50-50 with a risk to reward at 4, I mean, that's a trade that you just have to take, in my opinion. Like,
And look, if
that's
you lose, you only have to wait like 6 months for the next monthly time frame setup, so you'll be fine.
yeah, at that time you can just go to McDonald's and we're all gonna make it back.
Yeah, exactly. Yeah. Like, yeah, this is the thing. There's a direct employee. That's why they engage with crypto Twitter, right? It's like a direct employee pipeline for them, so it makes sense to keep those relationships at the forefront. No, that makes a lot of sense. Yeah, I guess I'm like, the thing is, the reason 30K feels weird to talk about is because I think the majority of analysts, traders, and so on were expecting that bearish retest at some point last year.
Yeah.
When we were like 30-40% away from that level and all the moving averages that were converged around there, it seemed like a very logical mean reversion target. But the industry was too busy embroiled in fraud and blowing up, so we didn't really get a chance. But now it seems like super exotic. As far as targets go, but on the way down, it seemed like a pretty almost respectful bearish retest that the market should have offered, but didn't really. I think on the speaking of the monthly time frame and the low probability for fakeouts, if there's a close above that level you don't like, the 23K, then that could be a late momentum trigger as well for people who aren't comfortable buying the close or trading basically in the low 20s. I think that makes sense, especially if you start looking at it on the weekly and the daily. That just might give you something quicker. But the good thing is, like I like to reverse engineer a lot of my trade ideas, as in I'll start by looking for an invalidation. Like, where should the market obviously not go if I'm going to have some sort of directional read, and then work from there in terms of like entry structure and take profit, right? Not the times that's easier, because it makes the sizing and risk management part of the equation a lot more straightforward. Like, where you're wrong, it's much easier to build that foundation, as opposed to where you think the market's going to go and then having to find invalidation, then find entry. To me, the first one's always a lot more intuitive, because it takes part of the most difficult ingredient within that. And at this point, this is the cool thing about this summer range reclaim, that bit is done for you, right? Like, I don't think there'll be any particularly reasonable or confident bulls left if we lose the summer range again, right? That would be pretty horrendous. So you can that the market's basically giving you a line in the sand or some sort of invalidation to where you can at least be sort of optimistic. And then it's about finding an entry, be that on strength or as close as you can to proximity to invalidation. But it's quite nice when you basically get a one and done level like that majority consensus, or for most reasonable technical minded traders, losing the summer range again will kind of extinguish all bullish signals. So it's definitely kind of nice, to just have that lack of ambiguity as far as the market is not bearish in the short to medium term as long as X. It's nice when X is straightforward. That's what I'm trying to say there.
Yes.
Cool. I think that's the monthly settled. Is there anything on the weekly or daily that you want to talk about, or do you think that's mostly covered by the higher time frames? I mean, the daily has just kind of been more impulse, consolidate impulse, which is something we talked about in the last show, whatever. But the pullback levels and the breakout levels all seem to be very similar, right? Are there any lower time frames things you're looking at?
I mean, the daily looks insane to me. Like, I'm very surprised it's still this strong. I made the same comment when we were trading at 21K-ish, like that consolidation, where I was like, okay, it's starting to creep up again. How funny would it be if it just pushed up again? Like it did at 16K, right? Where we had this like slow walk up. And then I was like, oh, maybe we get the same thing at 20K. And we did. And now we're doing the same thing again, right? Like, this is just a slow crawl upwards. Very, very slow. But there's no major dips, right? There's no, like, not even a wick that you could buy, which is kind of exactly what I wanted to see. I still maintain the belief that this is basically a rally that's going to fuck over the sideline people the most. The people that actually like crypto but just didn't want to hold it anymore because they're like, oh, macro is so bad or whatever. And I want to see them get pain tested, basically. Like, how high can it go before they just start like just freaking out. I don't really think they're freaking out yet, but if this continues, I think they would. So I want to see a little bit more of that. So I like the daily. The slow crawl up, sideways crawl up is my favorite thing to see in crypto. This is the third time we're getting it. First time was 16K. Second time was like a little bit of a short one at 21. Now we're getting at 23. So I'm hoping that we get another impulse next week, and I think that would take us into levels where it's really hard to argue that not that the 16 or 15K wasn't like at least an intermediate bottom that we probably not going to trade like below for the next 6 months. And I think that's, I mean, for me, it's pretty likely. Could even be a bottom, like the bottom for this kind of bear market. But I don't want to lean myself out, like just like go that far. But like say that because I mean, I don't really have anything to gain.
Clout, the most valuable currency. Come on.
Yes, but I mean, when we were trading at 15K, I was like, this is probably the bottom, and so I can, like, it's probably the bottom still. Like, I still think it's probably the bear market bottom. People that didn't buy will probably regret it, but we'll see, right? And I think we're gonna be trading above at least 19K for the next 3 to 6 months, very, very likely. So yeah, I'm liking the price action. I like how this is looking. There's not really that much like different. Honestly, I think the monthly is just the best chart right now.
The thing is, it was so inactive for a while as well, right? That's what makes it cool. That for a while we really couldn't use the monthly because it was like 14K or above 20K, and the market was stuck between those levels for months. So it's nice to see that time frame back in play because, you know, as you said, historically it's been a very good one if you're patient enough.
Yep, it's just good. We're gonna enjoy trading that. I'm very certain. Like monthlies are always monthlies are always great. It's just how it is.
You also just want your 3AC gap redemption fill, don't you? So that's really where this is all coming from. So that would be quite poetic.
The reason why, like, I mean, I'm just gonna be too ashamed to post it again, and that's why it's gonna play out. Because I'm just gonna be like, no, I cannot. I posted it, and then FTX went belly up. I cannot post it again. But I would like to see the 3AC gap filled. Yes,
it's in your heart and soul. Fair enough. As far as ETH goes, I mean, ETH BTC has actually started moving for a change, at least within lower time frame ranges. I'm wondering, you know, we've got the monthly close coming up on ETH as well. This is slightly less clear than BTC, right? Yes. As far as the monthly time frame goes, we kind of discussed the potential validity of the highest close that we had after the June nuke at sort of 1680 or thereabouts. You mentioned, you know, that was basically where your old Bitcoin breakout idea was before the level moved down to the 20K range, which we then reclaimed, right? So they kind of got adjusted for that. I'm wondering if there's any similar adjustment that you can make a case for in the monthly time frame that's similar, or is it just 1700-ish range high? The weekly time frame is better. Monthly is kind of, you know, you can take that level, leave it, not as important. Because for me, that's really the only level that seems to make sense. Everything else is a bit choppy and blocky and whatever else. I think the upside targets on the breakout are again similarly clear in terms of just the old range, you know, 2000 plus basically in one form or another. But really the only monthly level that I'm paying attention to is that monthly range high at 1700. Do you even care about that, or is your thesis mostly weekly breakout oriented?
My ETH thesis is basically we retested the monthly support at 1.1K. And there's no real level that I like between 1.1 and 2.2. So let's go to 2.2. And this is on the monthly on ETH USD. So yeah, I think that's the only thing. I don't really like any other charts. I don't like the daily. I don't like the weekly. I don't really like the monthly either. It's just, it hit support. It bounced exactly where it needed to bounce. It did the same on the weekly, really. Like we talked about this when it was like just hugging this 1.1K support level, which got us stressed out. But we're talking about
me mostly.
Yeah, I was like, I think it's gonna hold, but I'm not sure, right? But now that it held, that was the important level to hold. And any other level, I find kind of garbage. So I think like the 1.1K to 2.2K bounce is quite nice. So that's what I'm looking for. I think that's the one thing that makes the most sense. So everything in between, every single level that I've drawn there, I wouldn't want to do business. business at. I think there's reasons to kind of buy supports and whatever, but I'm kind of glad that I don't have to, because I have a little bit of ETH. The moment I think Bitcoin's stopping, I'm going to buy more of ETH just based on the ETH BTC chart. But right now, like, I wouldn't want to change my ETH position because it's far from resistance, it's far from support. It's basically in the middle of a range where it's been chopping horrendously, which just makes it hard to trade. So I think even lower time frame trades are probably better done on Bitcoin or on other altcoins. ETH just not clear.
Yes, the 1700 is such garbage, isn't it? Like,
yes,
comparatively.
But even if it moves out of 1700, like, what do you do? Like, if it breaks, like if it closes at 1800, do you just buy and then take it to 2.2, like?
Yeah, I don't like any. This structure sucks, to be honest. Like,
yes, like this is hard to trade, which I think is an interesting thing, right? Whenever like something you want to buy something, but you cannot find a good place to buy. That makes for good FOMO, right? Because a lot of people are going to be looking at this and be like, what do I do here? So if the market turns and if the altcoins get a bid, I think ETH's going to be really interesting, just because there was no place other than 1.1K where you can just buy it without losing your hair. So yeah, ETH is a
not
tough
that you
one.
need any help with that, Don, as I saw recently. I think the solution in those cases a lot of the time, as you said, you have to kind of just go to, like, there are no great answers, but one potential answer is to look at lower time frame ranges, because sometimes they can be a bit clearer, and use invalidations for those. But still, in the back of your mind, you're cognizant that higher time frame you might be in the middle of nowhere. But if you really want to hunt something down, and the higher time frame charts suck, you basically have to concede that point and go to lower time frames and try to find clearer invalidations there, I think, to be honest. I would also, I talked about this last week, and I still sort of stick by this. I would find it quite surprising if at some point we didn't poke that double top at 1677 or whatever. I know it got poked on like Coinbase and a couple of perp exchanges, but I just mean really sort of attempting a breakout there and seeing what happens through that 1700 handle. Like, those types of structures don't just linger and stick around for particularly long, especially if they're in tandem with, short to medium term momentum. So kind of curious to see how that resolves. A level I think we also talked about it on Technical Roundup, the newsletter. On the daily, ETH is also kind of hugging its pre-breakout consolidation at sort of 1570 to 1500, or the 1500 handle more broadly. That's been a functional short to medium term line in the sand as well, because if you look to the left, it gets kind of scary, right? Like, not scary necessarily, but it's because the charts are so ugly both ways. Like, it turbo nuked through 1400 and then it turbo mooned through 1400. There's really not a lot going on there, sort of volume profile wise, or how price was distributed. So it just feels thin, right? Like, if you're particularly bullish, you want to see this specific 1500 consolidation hold, because then if it doesn't, you just go back into gap territory, and then it's that weekly 1400, and then it retraces a lot of momentum stuff. All that starts looking garbage. I think for both BTC and ETH, best case scenario to avoid anything particularly scary is consolidation into continuation, more so than large pullback, because there are a lot of gaps there that would make for some scary looking price action, I think.
Yeah.
So we'll see if anyone gets an entry. The Don thesis is basically, it's not enough that I win, others should lose as well, right? That's sort of the summary version. So now that you got your entry, no one else is allowed one. That's the playbook we're dealing with.
It's horrendous to have to say that, because it's like, obviously everyone's just going to be like, oh, well, fuck you. Like, what is this? But I think it's basically you buy early, or you get screwed over. And what is early and what isn't is the really hard part, right? Because maybe 23K is still early. I cannot tell if 23K is early in the rally or if it's late. But that's kind of something that everyone has to figure out for themselves. But yeah, I hate saying it, but I think that's what's basically making this price action as it is. Like, you've seen...
It's a lockout trend type of thing, right?
It's a lockout trend, exactly. I like that a lot. And I think that's kind of...
I don't.
I think that's kind of how it's going to play out, if I'm right. And
sure.
And basically, if it doesn't play out like that, I'm gonna assume that I'm wrong, and then I will look to close my positions.
So this is like a very important part of your thesis, not just like a convenience factor that, lol, I get an entry, you don't. It's like, no, if my overall thesis is right, it should look and continue to look like a lockout trend.
Yes, because I think the whole like everything below 20K basically got a lot of people shook up because no one thought we would even go to 20K or barely anyone. And then we went below 20K. And I think that just got a lot of people in the industry shook. And I think that a lot of people made a bunch of bad decisions basically. And I want to see them bleed for it. And not because I want like, other people are losing, but because that is kind of the best case for positive price action. And that is the best case for this to resolve. And I think it's resolving the way it does because that's the case. But yeah, if people start getting entries, that turns out around really quickly, right? Because we are in a bear market. The trend has been massively down. And if I'm wrong on that part of my thesis, this thing can turn around really fast too, right? Because it's a bear market rally at that point. Like if it's not
Stop calling it names, bro. I listened to Technical Roundup and said it was stupid.
Yeah, I mean that's the thing. Like you can just trade it and then you'll know, right? But just talking about it makes it easier. That's why I think a lot of people use it. But people use it to justify not entering, which I find it a bit stupid.
Don is so bullish that even a pullback to support is bearish. You heard it here first. ETH BTC, has that moved enough from its higher time frame range to be interesting yet? Because I mean, on the weekly, it's been between like 0.07 and 0.05-ish for like since infinity, basically. And there's no real weekly market structure shift yet. Nothing like crazy. Like obviously recently it's been weak relative to Bitcoin, and you've been commenting on that on Twitter. But bigger picture, has this done enough yet, or is it just kind of confluent strength that you want to see Bitcoin bid and alts and ETH and lower cap stuff suffer in the short to medium term for that later rotation to be set up more favorably?
Yeah, I think this is probably going to continue. And the scary thing for altcoins, especially the ones that have been bleeding, right? And I mean, honestly, everything's been bleeding besides the ones that are getting short squeezed, right? In comparison to Bitcoin, like everything's gone up in dollar terms, but mostly we've just seen bleeding on the Bitcoin pairs besides the ones that are just like fucking short us over royally, right? And I think the scary part is about all of this is that ETH hasn't really started even going down. And there's a lot of room for ETH to go. And if ETH goes, everything else will go too, as in it will go down. So I think 0.057, that's the level that I will be buying if we get there. We are approaching a really good support, which is 0.066, which I'd be interested in buying, but I'm not gonna like 100% gonna do it just because I think it's a little bit early still. So that's the level that I'm gonna watch. If we just like hit it and then don't do anything, basically, I'm probably not gonna be buying it. If I see like a good reaction off of it and something that like in general, like a good kind of like a way for like a redemption arc for altcoins, basically. If I see like a bunch of altcoins that are not necessarily short squeezes getting a bid, I might buy like a little bit more ETH, basically exchange my Bitcoin for ETH. I'd be down. But that I'm really not certain about. It's like 0.066, that one has me concerned. Like I could see myself buying it, and then I could see price actually go below 0.05. I think, or like 0.056, because I think you could even trade below the fake out that we had below the range, just based on Bitcoin strength. So I don't know is the answer, but I think it's gonna continue being weak. But it's heading to supports. And I want to, like in general, I think it's a really good rotation. Like I think ETH BTC is gonna break the highs that it set, and it's probably gonna break the all-time high or like get close to it, which is just like a 2x away from, like it just has to double against Bitcoin.
Just has to double.
It's not that much for an altcoin, really. So I think like I could see it approach that. If it does flip in Bitcoin, I think that'd be a good signal to get out of the market for good.
Yeah, that's fair enough.
But
Historically, the hit rate of the ETH BTC flipping thing is kind of insane, right?
oh yes, every time it gets like heated and people are like, oh, it's gonna flip. People start saying that early, and then it keeps on running, and people are like, oh, now it's like for real going for it. And the moment you see it everywhere, you just want to run.
It's like crypto's own decoupling trade, just with BTC and ETH. I mean, that makes sense, but presumably your base case rotation is still like Bitcoin goes up, bigger bleed out on alt BTC, ETH BTC, whatever, and then depending on the size of that extension and the magnitude of the bleed, if those USD and BTC pairs for alts reach more interesting levels as a result of another thrust up in BTC, that's where you'd start to scale in some of the rotations, right?
Yeah, exactly.
Cool.
Well said. Yeah.
Yeah, I'm a full-time student, so I've got my notes ready for what Don thinks about the market.
Oh God, please.
As well as all the profanities you privately messaged me, but they're not for this show. Look, I want to actually touch on some altcoins. They're like, I was kind of thinking about this one thing, specifically with Aptos, right? So the amount of bodies that have piled up trying to sell this thing, it's a very tall pile at this point. And like a few things come to mind. I'm going to try to make it somewhat pedagogical or whatever. I think I just made up a word, but we're going to roll with it. So what people will do when they approach markets and they have like a very concrete idea of this thing called the dominant trend in their head, like we're in a downtrend, stuff like I should sell stuff, right? Let's start with that. Now, fine, I can jive with that. Then they have the second premise, which I think is far less certain, and it's some sort of weird subscription to fucking Newtonian physics, where it's like what goes up must come down or some shit like that. And so in their initial instinct, and I had this for a while as well, and it's a very bad way to think about markets on average, I think, but they want to sell something. Instead of looking at stuff that's objectively weak, so like performing poorly or not having strong rotations or lagging behind, whatever, they actually just look at stuff that's strong. And I think there's some sort of anchoring bias or something else because they're looking at the chart and says, well, this went up a lot and we're in a bear market. And if I sell it, it's going to go down a lot. And therefore, that's a bigger gain. Right? And I think a lot of people genuinely reason like that. And I just think it's not the best way to reason. Because if anything, you have to just look at the evidence that the market is giving you. Like, that thing is up a lot. Yes, you get outlier cases where there's some sort of weird open interest, manipulation-y, complete outlier nonsense, one specific exchange pushing it, whatever, on-chain governance voting proposal, those anomalous cases. In those cases, you might want to consider that thesis, fine. But for the majority of people, they will genuinely be bearish in the market, and then as a result, end up looking at the strongest stuff in that same market and try to sell it. And I just think that's a bad approach. And nothing embodies that better than Aptos recently. And so I just think it's a dangerous thing to be like with Aptos, the way it went was, oh, why is this thing going up? Right? That was the first question. Why is Aptos going up? And then in the absence or in the perceived absence of a good reason for it going up, then the immediate inference was, oh, well, then I should sell it because there's no quote unquote good reason for it to be going up. I just think that's a really bad way to trade, I think it's completely reasonable to ask the first question, which is that, if something's performing really well or really poorly, you kind of look to see whether there's a catalyst or what the cause for that may be, if there is one. And that's an important caveat. Sometimes shit just goes up and down, right? Someone knows something, doesn't know something, market microstructure related stuff like short squeezes, like we'll get onto. All of that is normal. But then going from that to the second step of, oh, well, in the absence of a reason that's immediately apparent to me, that means the market is wrong and I'm going to sell it or I'm going to buy it. I think that's a huge mistake. And I think that just costs a lot of people a lot of money, especially with something like Aptos. It's like, well, why is it going up? It shouldn't be going up, whatever. Like, first of all, sort of conventional classical wisdom. The market doesn't really care what you think, right? Like, the shit's going up. Maybe someone knows something you don't, or there's some sort of mechanic at play. Like, there's a reason for that relative strength. So I think the reason is, like, immediately you should be suspicious of that if you're looking to sell it, right? Like, why is it so strong? And why am I looking to sell the strongest thing that's been in this entire market? That shouldn't be where your attention is pointed towards, in my opinion. At least not as a starting position. Then if you look at the specific mechanics of this thing, it's just been short squeeze city, right? Yes. So you can open up Coinalyze and look at Aptos and kind of plot the open interest and the sort of aggregated funding rate and aggregated predicted funding rate or whatever else. And what you basically see is sellers just piling in to fade this thing. It goes up, it squeezes them. Those sellers become forced buyers. It goes up more. More sellers step in thinking, oh, well, that was it. Those guys were wrong, but I'm going to be right for some reason. And the same happens, and it just creates this liquidation flywheel that creates higher prices and sucks in more people thinking, oh, well, there's no reason, quote unquote, this thing should be going up. They apply some weird fundamental analysis framework for it and just get carried out by basically perp mechanics, for lack of a better term.
Yeah.
So I just think, if there's going to be anything useful to gain from this, it's good to ask questions as to, why is this thing weak? Why is this thing strong? Looking for catalysts or whatever. But like as a basic takeaway home point 101 thing, if something's super strong, your first instinct without good evidence shouldn't be to sell it. And just like if something is showing outlier weakness, your first instinct without evidence shouldn't be to buy it. I know that sounds super self-evident, but it's crazy how many people think of that in the complete opposite way, Yeah,
it's ridiculous. It's just stupidity, honestly. I think anyone that's kind of gotten carried out on the short trade is either someone that just tried to hedge, which, I mean, fair enough, right? Let's say you made a bunch of money on the pre-sale of this thing or whatever, seed rounds, and you just try to hedge and then you get blown out. Like, that's one thing. It's not that embarrassing. But if you step in just because, oh, this is the strongest thing, I'm going to short it, I think that's just bad trading. I think that's just bad traders in general. Because this is exactly the opposite of how you should look at markets. And exactly as you said, it makes no sense. And what we've been seeing in pretty much the last 2 years almost, that whenever you have an open interest increase and a coin is talked about a lot and it goes up a lot, these coins usually go up more, right? So it's like, why would you be, if you don't have any extra info, why would you be the one that kind of tries to hero short? The thing that I think a lot of people do is basically they're like looking for something. They're like, oh, this is up 50%. If it goes back down, they start thinking in P&L, right? They're like, oh,
Yes.
It went up from $3 to $6. So if it goes back to $3, I can make 50% on what I put in, right? So I can, oh, this is going to be great. And then they start thinking in that kind of weird P&L thing. And then they get blown out, right? And the market goes higher. And now it's trading, like they started shorting at like 3 or 6 even. They started shorting at 6. Now it's at 8. And they're like, oh, well, like I lost on my first trade, but I can do this again. And if it goes back, like if it goes back to where it started, I mean, I'll make my money back and then some, right? And then
It's
they
like
short
some
it
Martin
again.
Gale shit.
Yeah, and then they short again, they get blown out again. And they keep on doing this. And I mean, I've seen a bunch of people do this in Discords and chat groups where they're like, this cannot be. And they just
Our private messages.
they get lost in the sauce for some reason, right? They're like, oh, this is just, I'm going to make it back, basically. And this is the worst thing. Like, this is, if you see someone like that just full-blown tilts, try to help them if you can, but usually you cannot. Like, people they just do dumb shit. And we can talk about it, right? And that might prevent you from doing it before you do it. But once you're actually in that spiral, I don't think anyone can help you. I've seen it too many times. People just refuse to listen. And then they just get blown out and the coin goes from $3 to, what is it trading now? I don't
18.
even know. Oh, God. Yes.
Yeah. Also, can you open up the 4-hour chart on Aptos USD and show me where the clear breakdown or failed breakout into breakdown or loss of market structure or evidence of a downtrend is between like $3 all the way up to 18? It's the most stair-steppy thing ever, right? Like, forget how much it went up, forget funding, forget perps, open interest, all that type of stuff, all of which is useful. Like, where's the setup?
Yes.
You know? That's just... look, I know it almost sounds like useless to say because it's so self-evident, but it really isn't. I genuinely, in like my first year, used to reason in that exact way, right? That something's down so much, oh, it's going to mean revert. If it retests or whatever, I'm going to make a lot of money, so I'm going to buy it. Or it's up so much, if it mean reverts or retests, I'm going to make so much money if I sell it. It's just a really bad way of thinking about these things, especially in crypto. And another analog to that is the classic sort of, oh, this thing is pumping really hard and it's really strong, and I want bullish, upside exposure to the market. Instead of focusing on that thing that's proven to be strong, I'm going to look at lagging stuff because the market's going to quote unquote catch up, and I'll play that trade because I'm late to the one that's actually strong. It's like this is like pure midwit sort of thing, right? There's no other way to put it. Like the 50 IQ guy goes, this thing is strong. I want to be long stuff that's strong, so I'm gonna buy it, right? And then sort of if you're in the middle, you start overcomplicating things and playing mental gymnastics with yourself, and so talking about catch up this and the market is wrong here, and it's just not particularly useful.
No.
And thing is, all this data is very publicly available as well, like via Coinalyze and Trading Light if you pay like 10 or $30 or whatever it is. So yeah, hopefully some lessons there. Although with the frequency with which we see these things, it doesn't look like any lessons are being learned anyway. But yeah, we'll keep an eye on this. But fucking hell, that's just one where I think the takeaway point is like sometimes you should take the market at face value, right? Or at least your starting assumption should be to take the market at face value. Like strength is strength, weakness is weakness, and then you can sort of start digging to see whether something doesn't add up and there's an edge there, or something's being mispriced, or you see some sort of opportunity. But immediately fading it just because it's strong, or immediately buying it just because it's weak, just this isn't the right market for it, in my opinion.
Yes. Especially
and
given,
by this, I mean crypto, not just like this move,
I mean, in crypto, the fundamentals go up when price goes up, right? I mean, I can bet you now that Aptos is trading at 18, people are actually seriously considering it as like a great thing. They were not at 3 or 5 or 6. Like, price goes up means people actually start making shit up why like it should be going up.
Bro, are you telling me they didn't build a budding ecosystem in like 2 weeks? Are you crazy? The ecosystem is about 4 times better than it was a few weeks ago, okay? That's just like clear facts, bro. Do your homework.
Oh, yeah, my bad. But yeah, it's just like people are going to love stuff when it goes up, right? And they will find reasons to be bullish it, which will make other people buy it, right? So like Aptos is probably going to do like what Matic did. If you guys remember like the last bear market, whatever, bear to bull market, Matic went from 0 to hero, like very high up in the market cap listing. And then it didn't do shit anymore. And it's just like people that shorted it didn't make money. People that kind of like bought it made a shitload on the way up and then held it through like a bull market where it didn't really do too much. Or Link, the same kind of like, you have these outliers, right? They run up in the market cap ranking. And I don't think Aptos is going to do a 90% down thing while everything else is doing something else, right? Like Aptos is just going to behave like the market is. At some point, it's going to be too big and then it starts getting slow and starts dying. That's kind of how every single altcoin goes. The same with Link, the same with Matic, the same with a bunch of stuff. They usually hit a certain level in the market cap rankings. They hit a certain market cap, and then they just stop while everything else is still moving. But sitting there trying to get the hero 90% retrace short, I think it's just a stupid way to play this. Unless it's like a Ponzi, like Luna was. But I've not seen any of that kind of sort. I haven't really seen any good FA done on this thing.
Because there are no fundamentals, yeah, it makes it quite tricky.
Yeah, but I think
it's go on.
Yeah, you just let this thing if you like really want to short it. I mean, be my guest. There's a bunch of like low time frame shorts available, probably where you get like 5 to 10%, 15%.
Yeah, because it's volatile, right?
Because it's very volatile. Yeah, but like this whole like I want to short this shit to the ground. Like this is just so stupid. This is not how crypto works. Anyone that says this just hasn't been trading crypto for long enough, because this happens all the time. Like there's a coin that gets picked out early in the cycle. It heads to unimaginable highs, goes completely crazy, and then just stops doing shit. That's exactly what I'm expecting for Aptos. I don't really expect this like, okay, it's going to make this huge drop where bears get rich. This is kind of a scenario where I think bears always lose, because there's probably going to be better things to short. Yeah. If you short it and it doesn't move, you're still sitting in a position where you could do something else with your life. It's just, I don't know. I don't get it.
Yeah, it's an odd way to think about markets, but a very common one. And again, something literally I was victim to for like my first 6 months, maybe even year. So worth talking about for sure. Mm-hmm. And the funny thing is, even if you thought that this is some ridiculous mispricing, liquidation-driven cascade, it's not worth $18, and you kind of see through it, whatever that means, ironically, you'd still make more money buying it on that realization than you would like trying to be the hero selling it down to quote unquote what it should be, right? It's like that point you made about if there. Oh, sorry, just banged my elbow. That hurt. If there were some cartel and prices were manipulated, etc., like the rational thing to do is to fucking buy, right?
Yes.
Like if you've identified this indiscriminate, huge sort of clip buyer who just doesn't care and is going to keep buying, you don't fade that, once you form that thesis. I mean, maybe you're more risk averse on your longs and take profit earlier and do whatever else, but like in the short to medium term, having identified that type of market participant, you tail them, you don't fade them. So yeah, any other altcoins that you think are interesting or that have your attention? I think like given the rotation you've argued for on BTC, presumably it's over the next week or two that you'll be scooping up or at least charting alt BTC pairs, alt USD pairs, looking for entries as opposed to in the next week or so.
Yeah, it's going to be a longer term thing. Like I'm not planning. Like I have a bunch of altcoins. I've talked about them before. I mean, Litecoin. I bought a little bit of XRP. I have ETH, but it's not really like. I don't really care how well they do. They're basically just insurance that if I'm wrong on my altcoin rotation and they just suddenly go crazy, I have some. Like I'd feel stupid just seeing great setups because they're all on the USD pairs. They all had great setups.
Sure.
To kind of let them go by. But I think Bitcoin is just gonna outperform most of the market. So I'm going to give it some time to kind of transform more Bitcoin into altcoins. Don't really see the point just yet. There's a few, I mean, we talked about Aptos, like Lido has been moving really well, that are like kind of bucking the trend of the broader market, but I don't really care too much. I just let them go. And then I'm going to rotate once I think it's time to rotate. So right now I'm actually on the Bitcoin pairs. I look around and I just see like everything going down, and I'm not surprised. It's just Bitcoin is so strong and it's still looking so strong. I think you could make an argument like if you just put Aptos and Bitcoin next to each other, the rallies start looking really, really similar. I think it's the same.
So Bitcoin's going to go up 4x. Got it. That's what I learned from that.
No. But it's kind of like it's the same thing where people just kind of disbelief short into it and don't want to buy it, all that kind of stuff. But then at some point they have to. I mean, Aptos you definitely don't have to buy, at least in my opinion. But yeah, the mechanism of just going up and just squeezing people out left and right, I think is probably going to be similar. So I don't think that necessarily translates into the altcoins. That means I just don't want too many of them. I have enough already. I have quite the position, which is a little bit like when I bought the altcoins, especially like Litecoin, which is my biggest position by far. Litecoin ran on the Bitcoin pair quite hard, and it's retraced like I think like 70% of that move that it did like on the Bitcoin pair. It's still up a shitload against the USD pair, but it's on the Bitcoin pair. It's just kind of been struggling. So I was early to it, which makes it kind of like I don't really care because it's still like Litecoin when I bought it at, it's up 50% or more, like roughly 50% from where I bought it. Bitcoin is also up roughly 50%, so it's like not really like the biggest struggle, but I can see how people in altcoins are already struggling, and I think it would make sense to make them struggle more. Kind of make them feel like they're missing out on this big Bitcoin rally. And then I think at that point, like if Bitcoin pushes one or two more times, I think at that point people would start capitulating on altcoins, and I'd be more than willing to scoop
You
it
are
up.
Mr. Max Payne, right? That's the funny thing. It's like as far as the BTC thesis goes, it's like everyone got wrecked at 15K, disbelief in the industry, lock them out of the trend and send it. And even if they have a position, these peasants have the wrong positions because they're in altcoins and they're going to mess up their rotation. And I will be the one buying Bitcoin at the lows, selling it to them at the highs, rotating altcoins in time to dump on their BTC. Oh man, this is just brutal. It's just, I don't know, this is some form of cyberbullying. I'm not sure I can endorse it. But understandable. There is an argument there. Let's talk about something which hasn't been relevant for a while and maybe might come back to bite us in the ass one day. Macro. Yes. So the S&P has been facilitative, to say the least. The 3900 level retest on the daily and weekly was a banger. right? That was
Yes.
a really nice type of reaction, pretty much exactly what you'd want to see. Kind of reclaim it, retest yesterday basically, and up today. Presumably, not much has changed on that front, where it's like above 3,900, good. Above monthly, perhaps more importantly, 3,700, also good. And in the interim, I pointed out, I think last week, that there are a couple of those wicks at 4,100 or thereabouts, that range high, where we had no bodies printed, just a ton of wicks. That seems like a decent area to fill and then see what's going on. But really, with the crypto momentum that we have, as long as this thing doesn't look bearish on higher timeframes, you can kind of just, I think, focus on your crypto positions in the absence of some crazy data or losing those key daily and monthly structures. Do you more or less agree? What would make macro come back to the forefront of your analysis?
I think if it goes above 4.3K on the monthly, then I'm starting to be like, oh, maybe the bull market's actually just back, and the whole macro things just like got completely front ran. Or below 3.7, where I'm like, okay, this range that we're currently in, this like big monthly range from 4.3 to 3.7, is actually just going to fail to the downside, and we're going to test much lower. Like those are the two boundaries that I have, where I start like seriously reconsidering things. Right now, I think the macro situation or the S&P situation is just going to be one where we mainly chop sideways, if a little bit up, because we're coming from support, so it makes sense to go to resistance. But yeah, it's quite funny, right? Because we've seen a lot of people say macro in the last, I don't know, like 2-3 months, and we've been going up since October, right? Like October has been the low. We walked it up. We made a higher low. We're breaking the highs now. Like that just looks, especially like on the weekly, it looks really good. So I don't really like people that are looking at the data and all the inflation numbers and kind of like try to like gigabrain it. I think they're kind of losing out on this, and the people that are just looking at the charts are not, which is I love to see that. The nerds are getting wrecked while the 50 IQ chartists actually get to print. Love to see it.
We'll see if they get their revenge, right?
I mean, the nerds always win in the end, but
right.
I don't know. Like this just looks good to me. I don't really see anything that has me worried. If anything, I'm assuming that the S&P is gonna be a tailwind for crypto, which makes holding crypto positions that much easier, right? And I think just given that the monthly still looks good and the weekly looks excellent, especially given we just broke out of the trend line that a lot of boomers have been watching. Like that's great, right? That's really good news. And I think that could lead to a couple weeks of upside. I don't think it would be too much. I don't think we would go above 4.3K, but like thereabouts, I could see. And I mean, given the strength we've had just off of like tiny green candles on the S&P in crypto, I think that's going to be a good time if it kind of keeps on playing out like I want it to.
Yeah, it at the moment, at least more recently, it only seems to have mattered on short-term big data releases, like CPI, etc. But today we had PCE completely in line with expectations, didn't really do much. So yeah, and I think there's a Fed blackout period coming up as well, so that'd be pretty awesome, right? Like no macro news per se, and technicals looking decent. That would definitely be helpful. But we'll keep an eye out on this to see if anything changes. Let's dive into some news, troll through some of the headlines that we've had the pleasure of reading over the past week. Starting with our friends at The Block, as always. Amazon planning new NFT initiative, according to Blockworks. Amazon is planning a new initiative using non-fungible tokens that could be launched in spring. One example could involve a push to get Amazon customers to play crypto games and claim free NFTs. Don, the first thing I thought when I read this is that I don't believe it. Like, it's just that I just genuinely, completely casually, I don't think it's true. And I'm like, oh, well, no, The Block reported it. Maybe they checked their sources and corroborated, etc. And then I also saw Neeraj, the head of comms at Coin Center, say that he doesn't believe it. So I'm like, okay, are we all being Walmart Litecoined all over again? I mean, this would be quite something thing. I don't even, and apparently this is like a very legit integration because it says two sources told Blockworks that the platform would be run out of Amazon rather than AWS or Amazon Web Services. And that's like, that would be a huge difference, right? Because we see obviously like the classic crypto pump is like, oh, we've partnered with Amazon and they just use like AWS for their website or some shit, or some sort of AWS blockchain partnership, which is quite easy to get and so on and so forth. But this seems to hint on like a deeper, more meaningful integration with sort of Amazon itself, so to speak. I mean, it would be cool, but I kind of want to hold out judgment. I don't... something feels off about this, but maybe I'm just so boomer cynical that whenever there are actual real signs of adoption, I'm like, no, it's fake. I don't believe it.
There's like one thing with the NFTs. Have you seen that on Reddit that they have like the bunch of NFTs on Reddit,
yes,
on the cryptocurrency subreddits, and I mean that's going quite well. Like that turned a lot of people from hating NFTs to loving them.
It did, yeah.
So
they're like avatars or something, yeah.
Yeah, it's crazy, and people just completely switched their stance the moment they got something for free, which is hilarious to me. Like,
yeah,
it's just,
wow, your principles were worth a lot, Like
yeah,
it
takes
logo.
like 50 cents. Like you get an NFT worth 50 cents, and you're like, oh shit, this is the greatest thing ever.
Never
like,
mind, yeah.
it's so absurd. Like these people sit there and hate on something, and then like it takes them nothing to change their minds and being like, oh, and it has me a little bit jaded every time because like you just have to give people money and then there's
maybe we're being harsh, and it's like, look, they were cynical because maybe they're like gamers and the other subgroups they're in have inherently written off NFTs, and in order to fit in they thought it was fitting to hate on them, and there were a lot of public scams and hacks, but upon getting to experience them firsthand that overrode the perception that was imposed to them on others. That's what I would say if I were a reasonable, non-cynical person, but I'm none of those things, so I completely agree with you. They just showed that their values were worth like 50 cents and were completely uninformed.
Yes.
So yeah, we'll see if this thing is true. It'd be pretty... I don't even know what it would look like, to be honest, but yeah, something like Amazon throwing their weight behind a non-cynical AWS type NFT integration would certainly be cool, but we'll see if the refund functions work just like they do for other products on the website. SEC bats down ARK's and 21 Shares' second Bitcoin ETF proposal. This is like the least surprising thing ever, right? Like, especially if you consider the magnitude of what happened in 2022. Who on earth is going to approve any kind of crypto spot ETF when like the entire industry was basically fraudulent? And the thing is, that sounds like a grandiose statement. I could defend it all day, like it doesn't even feel like an exaggeration to say like, it's like a huge parts of the industry were very incestuous, commingled, intertwined nefariously, and ended up being fraudulent one way or another. That unfortunately, that's like, that claim is more true than it is false, I think. Yeah. So if we were struggling with a spot ETF before all of that, I don't think the odds went up after 2022. So I just expect to see more of these rejections. And, Grayscale's doing all their performative lawsuits, we're suing the SEC, etc. But I mean, who's going to take Grayscale seriously at this point also? So, yeah, I think this is something for... years down the line, it feels like, at least. But I'd like to be positively surprised on that, but I don't think I will be.
No, I don't think so either. But
it ultimately sucks, right? Because boomers and other people who have more constraints about the type of allocation they can give to crypto, they just get wrecked by the shitty instruments in the absence of a clear regulatory framework and something like a spot ETF, etc., right? Because they get like shitty inverse ETFs, they get futures ETFs that are expensive, they get closed-ended funds like GBTC that don't even fucking track anywhere near the price of BTC, and so they have to buy like MicroStrategy, Coinbase, Nvidia, and a bunch of, maybe Bitcoin through Fidelity, but this hurts the institutional adoption one way or another, because you basically reduce their choices to getting exposure to complete garbage to where it's not even worth it and doesn't even look like the product they're trying to get exposure to in the first place.
Oh, you couldn't get me to buy MicroStrategy. What? Like, why would you, like, it's the saddest thing ever, right? And I do agree with you that we have like a massive problem there, and it's kind of hilarious that they're like, oh, we're protecting the customers, or like in general the people, because at the end of the day, like the people that want to buy crypto are gonna buy crypto, and the people that cannot properly buy it will buy garbage shit like MicroStrategy that is just gonna like get them wrecked. Like it's just, I mean, this is just absurd at this point, right? You'd want to protect people by kind of getting them wrecked. Doesn't make sense to me. It's completely ludicrous, but is what it is. And I mean, I
It
think it's gonna,
is what it is.
and I think it's gonna be like that for a while.
It feels like it, yeah. Which is good for kind of nimble retail, I guess, one way or another.
Yes.
We are so early, Don. The Block also reported that Moody's is developing a stablecoin scoring system, according to Bloomberg. And they're working on a system to rate up to 20 stablecoins. The project is in its early stages. Can I just go out on a limb here and say that Tether won't be terribly high on that list? Because, its reputation... Like, the thing is, Tether is so, like, battle-scarred at this point. Like, the amount of stuff that it's been through... And everything else has collapsed other than Tether, right?
Yes.
That's the funny thing. A lot of like sort of crypto peak doomer only type of people. And I do think it's very important to have critical voices in the space, even if they're like critical all over the place. I'd still rather have those people around than not. Because, maybe the 10, 20, 30, 40, 50, whatever percent they happen to be right. I think that serves a useful function overall rather than not having them whatsoever. And, and I know that's an unpopular take because you can make the argument that, well, they're also doomer on everything, that some people just miss out on absolutely everything. And I definitely think that contingent exists. But I generally err towards having more dissenting voices than not, even if they overstep in performing that specific function, right? But anyway, for a lot of that contingent, Tether has been like the bogeyman, the big red X in the crypto ecosystem for the longest time, and it's also occupied the most mind share and attention and everything else. And it's also like the one thing the entirety of last year that didn't end up going bankrupt, belly up, collapsing, whatever. So that must be very annoying if you're one of those people, because you were basically right, but you were wrong.
Yes.
Or you were wrong about how you were right. It's like a completely sort of misdirected your ire and skepticism into. And again, these aren't mutually exclusive things. A lot of those people who hate Tether are also commenting about how FTX, Alameda, all those relationships, GBTC, and so on and so forth. But yeah, this is like Tether's always been the bogeyman for people outside of crypto to point to like the biggest case of fraud, and this is going to blow up, and this is what's going to take out the industry. And now that the entire industry has been taken out, that list doesn't currently include Tether, which is there's something poetic, I guess, to that, or ironic, and whatever. Obviously, top of my list would be UST, which is the best stablecoin. I mean, 20%, Don. Who can say no?
Yeah, it's honestly it's kind of funny. Like you said, it's this ironic thing where these Tether truthers always were like, oh, there's so much shady shit going on in crypto, and they looked at, I mean, Tether like did some like not above board, I think, stuff in the early days.
Yeah, they were unbacked and had funds frozen and were doing all sorts of shit. Yeah.
Yes, but at the end of the day, they were looking at the one thing, like you said, that didn't blow up, that kind of made it right, I'm guessing. I mean, we cannot really, like, you can never really tell in crypto if something's actually 100% legit. But Tether just feels somewhat legit now, and I think it probably is to a large extent, as legit as something in crypto gets. Which, I mean, yeah, if you're a Tether truther, you've been out of crypto since Bitcoin's trading, has been trading at like $600. Now it's trading at 23. And you wanted to say, hey, I've been right all along. That kind of blows, right? Because not only did you miss one of the biggest bull runs in recent histories, you also you're just wrong. So it's a shame for the Tether truthers. But I'm sure one day they'll get the heyday.
Yes.
But then, like, everything's going to be trading a million times from what it is now.
It's like saying it's an echo bubble and it goes to, like, all-time high first and then crashes a lot later and say, aha, see? I was right. It came
Yes.
down eventually. It's like, yes, but how useful is that? And
Exactly.
also, like that concern about Tether specifically and the systemic impact, it used to be much more prevalent than it is now, because now we have, like, stablecoin to stablecoin conversions and transfers are super easy, super liquid. There are some really kind of risk-off stablecoins compared to when it was pretty much just Tether and nothing else. You don't have to. You can pretty much interact with crypto to the full extent that you want and avoid using Tether if you want to. So I don't feel it's as scary anymore. And again, the whole lindiness aspect to it, like the amount of bank runs it survived, investigations, settlements, etc. It seems, and also kind of, I'd still like to see an audit, but no one gives an audit anywhere in this industry, so forget that. But it seems from the attestations and assurance statements, all that type of stuff, that they are sort of also becoming less risky over time. Right? There was, as you mentioned, the extreme period where it was straight up unbacked, and now we're in an era where they're sort of trying to reduce the amount of sort of commercial paper they hold and do more cash and cash equivalents and whatever else. So even on, on their own terms, it's becoming a bit safer, which is cool. And again, if you don't want to use it or interact with it, there's enough in the crypto ecosystem now so that you don't have to. Instead, let the Binance cartel print BUSD. Am I right, guys? Am I right?
Like you said, the interesting part is that Tether, like if it went back, like if it went belly up during a couple times in crypto history, we would have all been kind of fucked, right?
Yeah.
But instead of doing that, it just ran, like it kept on going. And now we have so many alternatives that, like, at some point, if it does, even if it did, which gets more and more unlikely with every day that passes, right? But even if it does go tits up, it's still going to be okay. Like for crypto, like I think
it's coins with pump, right? Because what are you going to do if you think Tether's gone to shit? You just convert it into crypto. So pump it on's bags. That part is like half joking, but might actually be what happens sort of in the short term.
We've seen Tether pumps where people were afraid of Tether going to zero, where coins are actually giga pumped.
There's precedent for sure.
Would be fun.
It's like, I'm so bullish that I want Tether to go bust so I get a final exit pump. There's some mental gymnastics for you. Moonbird's creator Kevin Rose hacked at least 1 million in NFTs stolen. I hope he's changed his profile picture. No, sorry, that was out of pocket. But yeah, this is one of those where he just signed one MetaMask transaction and pretty much got fucking emptied, which is very rough. And it obviously sparked the whole security debate. Like, do you need a vault? Does MetaMask need to do more? Is it about having a hardware wallet and kind of security precautions around that? I don't know what the right answer there is. Maybe we need to talk to Udi, who has very strong views on this, and invite him on the show to make the case. But it just feels like there's a huge lag between the amount of people trading, investing, holding NFTs, the value of NFTs as a sector over time, and the UI, UX security experience built around it. There seems to be a huge fucking divergence there, where the average user experience and the security afforded by it and all those things I mentioned is just so far behind how bloody expensive and important these things are that this is almost a daily, if weekly occurrence at this stage of things being hacked, drained, stolen. You get like 1 million dodgy transactions and NFTs, fake airdrops sent to your MetaMask. It's literally like some sort of MEV jungle Wild West out there. And if you're really one of those kind of onboarding the next X number of users type of people, then the current infrastructure just isn't going to cut it, in my opinion.
Yeah, I agree. It's kind of crazy how many people have lost everything to just whatever. Like, I mean, every single way that you can lose stuff, people have lost it, especially the Bored Ape Yacht Club community. They seem to have figured out like how to get scammed in a million ways. But yeah, it's scary, right? Especially given that this is not just random crypto people that oftentimes, like, it's just people that are well established that should know better.
Yes.
And if they get wrecked, and I see this argument all the time. People are like, oh, you just need to do this, and you need to do that, and then you're fine. And then you see these community leaders that have millions in NFTs get drained out of all their funds, right? And at that point, does that argument still hold true, right? And I don't think it does, right? When you have the big guys, the people that are kind of natives to NFT get fucked, then I don't think you can make the argument, yeah, you should just be doing this and that, because apparently most people just don't. And even the people that move in this space constantly don't. So you cannot really tell like the new people that they have to do this and that because it's too complicated. If not even the established players can.
Yeah, what kind of standard does that set, right?
Yeah.
And it's funny, it's like, oh, just keep your crypto safe. It's like FTX, insolvent, Voyager, Celsius, BlockFi, wrecked, Luke Dash Jr., Bitcoin core dev, loses his BTC, large NFT, Moonbird's creator Kevin Rose gets drained. It's like, what the fuck, right? Like, where do you even look at that point? So definitely some work to be done there. Bitcoin.com CEO Roger Ver says he has funds to pay almost $21 million to Genesis. They basically filed suit against him, saying that he owes the money for a bunch of options, which is exactly what also happened for a bunch of options trading rather. And that's exactly what happened with with him and Flex as well.
Yes.
He's the reason, a large part of the reason, I think, allegedly in Minecraft, from my understanding and honest opinion, that they got wrecked because they basically just let him run up like a massive, just get in the hole basically for a huge amount, and then he just wasn't paying it back, and there was no, the insurance fund or whatever mechanisms shouldn't have been in place to just liquidate him and not affect other customers. Just didn't happen. Some sort of exemption going on there for, because of his status. And it seems like good old Roger likes to gamble, because the same thing happened with Genesis. He just seems like he owes them a shit ton of money. He, as always, disagrees that he does and says we'll take it to court and go through discovery, and Genesis misrepresented their financial situation, this, that, and the other. But it's kind of a sad place for Roger, I feel like, because if you don't know, he was like a proper Bitcoin OG, right?
Oh,
like if you think about Kraken and you're like, oh, Kraken's been around for ages, he was like one of Kraken's angels. He was like about as OG as it gets in the crypto space, with he was thousands, tens of thousands of BTC, whatever. And then he just kept going down these random rabbit holes that cost him presumably large parts of his wealth, like throwing all of his weight behind Bitcoin Cash that ultimately failed relative to the main chain, or BTC, or Bitcoin as it's known, and now this kind of. The funny thing is, allegedly, a lot of this trading that dug him this hole as well was actually trading Bitcoin Cash, and trying to buy it and trade around those positions as well. And so you have someone who is just sitting on zillions of dollars in BTC from being turbo giga mega early, and it's quite impressive that he's just found a way to fuck it up basically and lose large amounts of it and get embroiled in litigation and whatever else.
Yeah, he was pretty much the OG, right? Like he was the first one, to my knowledge, that just bet everything on it when it was very, very young. And yeah, if he's like, he should be one of the richest people. Like he should be eclipsing CZ, and for some reason, he's been doing dumb shit left and right, basically.
Yeah.
So fair enough. Props to him for being so early. Whatever he's done since, it's like, yeah.
Early doesn't mean smart, is what we've learned there.
Yes.
dYdX pushes back $282 million of token unlocks for investors, employees to December from February. So this is part of the recent catalysts for this coin and why it's been pumping. One of the theses that got blown out early this week was that all these tokens with like big unlocks are going to be really easy to sell in Q1 as the bear market continues, and those ended up being bullish unlocks, which is quite funny. And dYdX is one of them, and they were supposed to have a huge unlock, and they've got some crazy inflation rate thing going on as well. And that got pushed back, basically, and the market pumped as a result of that supply being delayed. Thing is, that's the explanation that maybe a Bloomberg journalist would give you. But realistically, the market pumped because other participants thought that other participants would view it positively, that those unlocks are getting delayed, so they're getting long. Do you know what I mean? It's like that's really kind of what's happening under the hood. It's really got fuck all to do with the specific supply being delayed. It's more so market participants thinking, what type of market impact is that news going to have, and can I front run it or attempt to get to that trade early, right?
Yes.
And also, it doesn't really change anything. It's not like they're going to burn the tokens or do whatever else. It just means that hits the market later. You're going to get dumped on later. But I think this is part of a trend which we commented on 1 or 2 weeks ago, that we're seeing, let's put it, creative altcoin teams come up with ways to, these homegrown catalysts for their coins in this type of market environment. And it's definitely been sort of altcoin headline season for a lot of this kind of stuff. And companies trying to find a way to get rid of some of the supply overhang that was planned for Q1. So yeah, interesting catalyst trade. I don't think it's some big revelationary crazy thing. They're like, oh, the fundamentals have changed or whatever. It just seems like one of those trades,
Yeah. I mean, in general, it's a bunch of people short, a bunch of people hedge based on the fact that they think, okay, this is going to go down because of the unlocks. And then even more people think that a lot of people shorted and hedged and they get long. And then this is kind of like the perfect trade, basically, where the shorts just get blown out completely because a bunch of people think that the shorts are going to get blown out completely. And then you don't even need that many shorts to do it too, because it's just the narrative, basically.
Yes.
The narrative right now is very much short squeeze, right? Which is a cool narrative to have, because whenever you see OI building up, it's like, oh, the short squeeze on, and then you can just pile in on any coin. and it usually goes your way because there's a lot of people that are gonna try to play it. So
And they keep selling into it. That's the thing. They get squeezed once, they keep coming back.
Oh,
like
yeah.
if, for example, it were a one and done move where you get the huge increase in OI, it gets squeezed. What the chart would look like from an open interest perspective is that entire build up OI gets retraced, right? Like a single nuke candle, and then you're back to baseline. The move is done. The issue is it keeps increasing as the shorts keep blowing out because they and or others basically keep shorting. It's like, oh, well, those guys get blown out, but I'm different, right? Or, oh, I got blown out the first time, but this time I'm going to nail it. And you just create this flywheel effect where those guys pile back in, and the longs that have made money just exert more pressure by buying more. And yeah, it's like a kind of like a slow motion liquidation cascade, for lack of a better term, you know, or a slow moving liquidation cascade. Speaking of dYdX, there was an interesting debate on Twitter between Yevgeny, who's the CEO of Wintermute, and my favorite, Jeff Dorman from Arca Invest. And the debate here is, it sort of speaks to a broader issue that you and I discussed about there being a lack of good regulatory sort of structures and frameworks in place for crypto, so that when a team creates a token, by definition, a lot of the time that token's going to be shit. Right? And by shit, I mean it'll be some useless type of governance token. And even if the protocol is accruing a lot of fees, the holders of that token won't get access to those fees, not in any kind of direct or meaningful sense, because the company, the protocol, or the corporate entity, you know, part of the protocol that's doing the token issuance doesn't want it to be like, doesn't want to violate securities laws. So then you have these kind of weird middle term sort of utility governance tokens, not really, where you get to post on forums and vote on stuff, even though the VCs with a bunch of weight will outvote you on anything that is remotely important anyway. And at the same time, you don't get access to any of the revenues and fees generated by the protocol, because doing so explicitly would make it a security. And so the only option that's left is like really shitty token models where it's neither here nor there, right? Like your voting power is for the most part illusory, nor do you get nor is it some sort of proto equity type of instrument, because all the fees go to the private company and not to you as the holder. And this is sort of what that debate was about. And then they're saying, well, they're going to try to, you know, I think they're running on Starkware right now. They're going to try to move to Cosmos and reward validators and have like a staking thing going on. But I just think this speaks to the clusterfuck that is crypto tokenomics in the face of quite old and seemingly not fit for purpose securities legislation that, again, designed to protect investors, just ends up hurting them because they're going to buy tokens anyway. It's just those tokens don't and can't do shit because the teams are too legally risk averse to give them any actual value, revenue, so on and so forth.
Oh, it'd be kind of cool if we could, right? Like I've been thinking about this for a while now. Like if we could just send like securities in crypto, like if you just had coins that are securities and they actually give you back money, like you find like projects, you find them early. I mean,
yeah, it's called staking,
like
Don. No, I'm joking.
It kind of sounds like a Ponzi every time, but
yeah.
Still, like if you could do that, would be quite cool. I mean, that was back in the early days, basically.
You're like Pomp, basically. Tokenize everything.
I mean, I don't think it's a good idea, but I would like to trade it.
I mean, he also said the virus is spreading, so he was early to that one by a few years as well.
True.
Yeah, I just think it lands us in a rough space right now with tokens.
Yes.
But that's the thing. Like, if you're one of those sort of boomer analyzing, revenue of the protocol, etc., it's like at this point, it's a facade, right? These tokens aren't equities. At best, it's sort of just like a narrative measurement tool of some sort that, like, if the team and the protocol is in good standing, has a lot of volume, fees, revenue, etc., and maybe some sort of staking mechanism, as you said, the fundamentals are tied with price, that's for the most part going to be one of your better indicators. And that's the thing, even if you were to disagree with that and say, oh no, it's going to be volume, TVL, etc., all of that is also very closely correlated with price. So in the absence of sound fundamentals, which we can't fucking have in the first place because no one wants to issue a security, price is one of your best proxies for fundamentals, for better or for worse. So if you see people buying and trading around these and making arguments for TVL, volume, staking, yield, devs, etc., underlying all of that is some price adjacent prognostication most of the time. Yeah. And even if it's not, it's informed by price anyway. So even if they think it's based on other stuff, it's not as detached from price as you might think.
Well said. I agree. wholeheartedly.
Which also makes it straightforward to look at because you just fucking look at the price, right? But yeah, I don't know, maybe we can live in a world where you and I will be the boomers and say, back in my day, your tokens did fuck all. And all the kids are going to be like, what are you talking about? People just bought things that were making a lot of money in revenue and you didn't get any of that revenue and you still bought the tokens even though your voting meant nothing from a governance point of view. It's like, hell yes, kid. Yes, we did, you know? That'll be a fun one to look back on. The final one is a CoinDesk opinion piece. Why is crypto bouncing back? And actually, I was expecting to roast this article, but it's actually just gives a fairly measured view of all the different narratives and what's going on. I enjoyed this read, so thank you, David Morris, for that. And it breaks up into a few subsections. The first one is titled America's Soft Landing, maybe. And it basically talks about the hiking cycle, where we are in the big, in the grand scheme of things, how inflation data appears to be coming down, if not peaked, and the adjustment made to the federal funds rate and all that type of stuff. So I thought this was the final paragraph says, that's nearly a Goldilocks caliber just right in macroeconomic terms, presenting the real possibility of a fabled soft landing that brings inflation under control without catastrophically stalling the economy and putting workers in the street. In turn, that's great news for risk-on speculative assets and crypto. I think that's a very fair summary of one of the prominent narratives at the moment as far as macro goes. That inflation doesn't seem to be adhering to the worst case scenario where it just keeps going up and stays very entrenched and that the Fed's actions have a much longer delay, if not no impact whatsoever, and so on and so forth. I still think soft landing might be a tad optimistic, or at least I want to see more evidence of that. I still remain cynical. But as far as drivers for the price action we're seeing right now, a kind of Goldilocks softer landing one definitely seems to be an accurate attribution. Even if you consider the Europe picture that you and I were discussing, all the burgers were telling us that Europe's going to freeze over and it's going to be a particularly bad winter and the euro's wrecked, etc. Winter has been and is projected to be quite mild, and all of those, Russia's going to kind of run off, you're going to freeze, etc. Basically the outlier doomer scenarios for the time being, as far as macro goes, seem to be in the periphery vision, which is nice.
Oh yeah, doomers were wrong once again. Who would have thought? It's always like this. The thing is, the one time that the doomers are going to be right is when everything is going to shit, so it doesn't even matter anyway. The full-blown doomers that I see so many times. It's just so popular nowadays.
And think about Binance at the bottom, right?
Oh yeah.
If you want a crypto example, the whole Binance thing, that was about as clear as a case you're going to get.
Yeah, and so that's kind of if you're right, you're not going to make money. If you're wrong, you're going to sit on the sidelines getting screwed over by everyone that was just willing to take a little bit of risk. I just think being a doomer is probably not the best thing to be if you're a trader, right? If you want to be a doomer in your life and you just hate everything, be my guest. But as a trader, I think you need to be a little bit more nimble. The doomer mindset, it's not necessarily one that's going to help you out.
I mean, look, being a doomer doesn't pay the bills, but it does sell the newsletters and the books, Don. So.
Oh, it's actually true. I think in general, bears to the normal population, and even to I think a lot of the people on Twitter and stuff, they just look smarter, right? Because if it goes down, they're like, I was the only one that was right. But the thing is, the ones that actually make the money are the bulls, right? Something can only go down 100%, but it can go up a lot more than that. And you can obviously open and close trades and all that kind of stuff, but it's very rare that a bear actually makes significant amounts of money. We've seen bulls just run up to God mode, in almost every industry. We've seen Ponzi's just go crazy. We've seen
2-3 weeks of alt season, wipe out a bear's positional tactical portfolio. But then, of course, all of that you have to filter for who keeps their money in the end or whatever.
Yes.
So then you have to measure newsletter sales versus trade. Speaking of people who are bad at trading who have a newsletter, do go to trletter.com, which is our free weekly newsletter. Write about markets, completely unrelated concepts, of course. Of course, yeah. This time it's different. Euro-China muddling is the second subsection and talks about China reopening, zero COVID, going away type of stuff. I think this one's more of a toss-up. I've seen some intelligent arguments made that China reopening might be a contributor to inflation, given there's a ton of economic activity there and the global impact that might have. I just don't know enough to have a strong view there. I don't think it's obvious either way, and I think it's far less of a driver as far as risk assets go than the Fed hiking cycle inflation argument. But still interesting. This one was this one was funny. Last one is titled "The Anti-Speculative Impulse." And the final couple of sentences read, "In a perfect world, we'd have continued curiosity and real user adoption without the manias or the blow-ups. Those manias with their expectations of outsized returns tend to push speculators towards charismatic hype men with their exciting new tokens and promises of outsized returns. 2022 has been a sobering lesson, yada, yada, yada." I'm super skeptical of people who look at crypto in its current form and look down on speculation. Because I understand, and especially given last year, like the cost of speculation is very high, but also in this kind of nascent technology and nascent sector, it is also the backbone of this industry to like a disproportionately large extent. And even devs should like speculators because they're ultimately the people who funnel money into your chains, your projects, your protocols, or whatever else. Even as users to try, I'm sure they might stake and dump and do things that are economically advantageous for them. But ultimately, it is the risk takers who. A lot of this is built on their backs, one way or another. Now, obviously, you get excesses of that, as we've seen, but I'm not one of those people who just says, "Oh, well, crypto just has to be the super serious, important thing, serving some big global use case, and all the speculators are bad." I'm always very cynical of that position, especially at this point in the technology's history. I think the degen gamblers are pretty important, to be honest with you. But maybe that's just my bias speaking for my people.
I mean, the thing is, this entire space is funded by the degen gamblers.
Yes, correct.
I mean, I'm not even like trying to be hyperbolic about it. The thing is, like, all of these things make zero money, right? It's not like any of these blockchains are really used in the real world. It's not like any of these products are really used for anything other than speculation. So if crypto wants to build something cool, right, it kind of has to be done with money that is earned by speculation for the most part, right? So as in, like, you have a project, you kind of make your tokens out of thin air. People speculate on it, so you can kind of dump your tokens to fund your work, and then maybe you find something that is actually cool and you make it work. But this is all like on the backs of the speculators, as stupid as that sounds, right?
We're braver than the troops, Don.
I mean, obviously, there's also investors and all that kind of stuff, but most
they're gambling as well, right?
Yeah, that's the thing. They're also gambling. Like, I think like almost every investor is there to make money, right? This is just how it goes. So like all of these developments, all of the advancements we've seen in crypto, they might be few, but we've seen a few. It's all funded by the speculation. It's all funded by people wanting to make money at the end of the day. And then you get like every other year, you get like massive rallies. The teams get hilariously rich, and then most of the teams just disappear, right?
Yes.
But some of the teams stick around, like ETH's been around. They've been kept on working on ETH. They shipped ETH 2.0 without any problems, right? There's some stuff there where people actually work with the money that they're given by the market. And it's when someone says like all the speculation, blah, 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 it's so stupid. Like, this is where the money comes from. This is the only reason we still have crypto, in my opinion, is because people speculate on it. And then maybe something comes of it at the end of the day, right? Maybe all of this money that is in this ecosystem actually makes a difference, and that'd be cool. But if you say like crypto speculators are kind of like a bad thing for crypto, it's just the most stupid argument I've ever heard.
We're the real heroes. Go thank your local speculator for bootstrapping the industry in one form or another. Don, from one speculator to another, that's, I think, the end of the episode. To our audience, leave a like on this video. We appreciate all the support, comments, etc. We hope Casual Friday is something you look forward to, and a nice little summary roundup for the week. As far as comments go, do tell us if you want us to upload these episodes to Spotify, because I think we've got the infrastructure set up. If you want to see us post that there so you can listen on your commute or during your shift or on your jog or wherever else, let us know explicitly in the comments. By explicitly, I mean make it clear, not sexualized stuff, and we'll make it happen. Don, have an excellent weekend. To everyone else, we'll see you next week.
Bye-bye.